SoFi Technologies, ticker symbol on this one, SOFI. SoFi Technologies, under an $8 stock. Stock's up 6.5% in the past year. It's been kind of a sleepy one for SoFi. So, SoFi, look at that. Is that not an awesome trailing 12-month revenue chart there? I mean, that's just a stair step. Stair after stair after stair after stair after stair after stair. It's one of those companies you can just count on. They grow revenue, they grow revenue, they grow revenue, right? Between their banking side and on their on not just their financial product side, but also on their tech side. It's incredible. Incredible company. Anthony Noto does a great job running the company. Now, SoFi has really attracted me in the past, I would say, year, because they flipped from being a major money loser to now a money maker. And so when that flip happens, usually over the coming years, there's a lot of very exciting things that happen in the stock price. So that's why I've gotten very interested in stock, especially in 2024, as I look and I'm like, SoFi is an incredible opportunity this year for buyers out there, because we just had the flipping recently in the past year or two from that money losing, just bad on the bottom line to money making company, right? Which is a big moment for any stock, and especially in the finance category. Now, look at the shareholder equity and how it's increased over the past few years for the company overall. Shareholder equity, very important, especially for a bank stock specifically, right? But in regards to SoFi, you understand this company is attracting Gen Z, they're attracting millennials. I think they're the bank that's the most well positioned to attract Gen Alpha. And I think their tech platforms, Galileo, is going to continue to expand over this next 5-10 years in a substantial way. So the main thing I would say, this shows you the members of SoFi over time. If we go back just a few years ago, they had around 1 million members. Now they're pushing 9 million. There'll be 10 million members plus here in the very short term, which is very exciting for this company. So the bottom line with SoFi, don't get too caught up in the valuation talk, because you might be looking at this one. There's certain company that when they just keep taking market share and market share and market share, which is what SoFi is doing, and they just have it over the traditional business model. You got to kind of look away when it comes to valuation, and that's what it is with SoFi. This is one of those stocks you just buy and you buy and you buy. Okay, and by the way, valuation is extremely attractive in regards to a stock, but that should not be your main kind of thought process when you're buying a stock like a SoFi here. Okay, now what are my buy prices for SoFi? Here they are. Load the boat is under $10 for the stock. Anything under $10, load the boat. Strong buy is $10 to $12 in the stock. Slow down on buying, 12 to 14, and stop buying over 14. Now, 3 years from now, 5 years from now, 7 years from now, might be very different buy prices on the stock, right? Might be willing to pay a lot more for the stock in those years, but given the risk reward right now, those are the buy prices. Watch risk levels on a stock like SoFi. You gotta watch out for that, because at the end of the day, with a stock like SoFi, you never know. You never know. Like, it's a bank. At the end of the day, it's a bank, and you never know if a bank could go bankrupt, and that would be an ugly situation. And so, I'm going to position into SoFi and continue to buy this stock, but I'm not going to go crazy with it, because it is a bank. You never know about those ones overall. Okay, so SoFi is an incredible opportunity. Stock number 5 of 5 is actually, guess what? We're going to have a whole bunch of stocks to get into. It's multiple stocks. Now, these next stocks I'm about to go through, they're not going to be my main focus in October, but there's a decent probability I could buy shares here and there, these particular stocks that we're about to go through. And so just keep in mind, those first 4 are really going to be my main focus, and these other ones might be a little bit more of an appetizer for October. Okay, first one up here, actually PayPal. I could actually buy more PayPal shares in October. And I know you might say the stock's gone up a lot, 35% gainer in the past year. Sure, it's down still massively from the top, and the valuation is still ridiculously attractive. Forward P on the stock's probably somewhere in the 15 range, which is way too low for a fintech with PayPal with this sort of growth rates and what Alex Chris is doing running this business. So PayPal, still a steal deal, even though it's up 35% in the past year. Shopify. You might say, gosh, it's up 50% in the past year. Is it really a buy? Yes, it is. Yes, it is. Abso-dang-lutely. It is still a buy. This is one of those companies, kind of like I was talking about with SoFi earlier. You kind of don't really worry about valuation. You buy shares and you buy shares and you keep accumulating shares. In my opinion, it's kind of like buying Amazon 10, 20 years ago. You just got to continue to buy the stock and buy the stock and buy the stock. And you're never going to love, with a stock like Shopify, with how great their growth rates are, you're never going to love the forward P on the stock. You're never going to love the trailing 12-month P. You won't even love the 2-year forward P on the stock. The moral of the story is buy the dang stock and don't stop buying the stock, right? Estee Lauder. So this is a turnaround play. Stock's actually down significantly over the past year, down about 31%. They had the brands the brands, multiple successful brands to make the turnaround happen. And I think the turnaround will happen. And so Estee Lauder, yeah, it's gone up a lot very recently, as in the past couple of weeks, but the stock's still down ridiculous. This should be a $300+ stock. I think the stock will get back to the $200 to $300 range over the next 3 to 5 years, and I think it's going to be a great gainer. They got a lot of work ahead, but the brands are what carry this company through. And Warren Buffett always says, own a company so great that any CEO could run it, right? And with their brands, whoever the new CEO is, they're going to have a hard time messing it up. They got a pretty incredible opportunity there. Next one is Nike. Nike's been in heavy buy for me for honestly the last several months. I'm going to start to slow down my buys in regards to Nike. My position's not quite fully built, but it's getting there in regards to Nike. And so I'm going to start to probably slow down my buying in October. But Nike is still a buy here. Next one up here, Celsius Holdings. Celsius Holdings down about 41% in the past year. This energy drink company, very popular energy drinks. You might drink them yourself. Very popular. Stock's been hammered. The brand's still phenomenal. The growth rates are obviously slowing down substantially for the company, and I honestly don't care. I look at Celsius, I see a company that could probably grow revenue 10 to 20% a year for a long dang time. The U.S. opportunity is still much bigger than it seems on surface level from here. The international opportunity is really substantial in regards to stock. So Celsius, extremely attractive here in low 30s. I hope it goes to 25. That would be ideal. But yeah, I got to continue to build out Celsius. That leads me to Monster Beverage. Monster Beverage is a buy here. Not the most attractive, crazy reward gain stock. Stock's down about 3% in the past year. This is more of a hedge. Just in case I'm wrong on Celsius, and let's say Celsius's brand fades or something, Monster will be the biggest beneficiary of that. They are the big dog in the energy drink industry. They own Monster, they own Bang Energy, they own Rain Energy, they own some other energy brands as well, but they're the big dog in the space. So if Celsius fades, Monster has nothing to gain than that. And honestly, both could end up being winners over the next 5 years or so. Next one up here, Fubo TV, a little bit of a riskier stock, streaming TV company. It's a dollar stock, so of course it's going to be riskier. As far as legal stuff has been going very well for them here recently, and they've been bringing down their losses in a substantial way. If they continue to bring down those losses and the legal stuff continues to go their way, thumbs up for Fubo. So very exciting speculative stock, right, with some incredible upside potential. That's one of those that, like, would I be surprised if it 10x's in the next year or two? I wouldn't be surprised at all, right? But there's also the risk of downside of going to zero, right, when you're a dollar stock. Honest should already be out of the gulag at this point in time. When I say gulag, I'm talking under $5. It should already be above that by now. I think it's on its way there. It's just a matter of time. And when I look at Honest, everything's trending in the right direction. Revenues, margins, profitability, all trending in the right direction. Carla's doing a heck of a job running this company. The stock's up 193% in the past year, and I'm actually looking to potentially add some more shares in October. So very exciting opportunity there for a needs-based company. Hey, it's Jeremy. I hope you really enjoyed watching that clip here today. What you're looking at in front of you right there, that's 1000xstocks.com. That's my advanced software that I've been working in the background creating for a long time. This software is so much more advanced than what others are presenting out there in the market. And as somebody that's been in the market 15 years, I want to create something that was simple, that had exactly everything I needed to make my judgments on companies, such as forward P ratios, 2-year out forward P ratios, price to sales ratios, forward price to sales ratios. I wanted the ability to be able to compare different companies versus each other. I wanted to be able to compare a Meta versus a Google versus an Apple and be able to see all those different metrics laid out all next to each other. I wanted a service that I could listen to conference calls right through and even be able to toggle and adjust the speed I wanted to listen to those conference calls. I wanted a service that I could search SEC filings right through. I wanted the ability to do that all in one service, and that is exactly what I've created with 1000xstocks.com. If you want to apply for access to this, go to the description area of this video. You can click that link and go ahead and apply for access to this. If you don't want to do that, you can go to 1000xstocks.com. Enjoy. e.l.f. Beauty. e.l.f. Beauty. They are a growing cosmetics behemoth. Now, in regards to e.l.f., it has been on a wild ride the past year in regards to stock price. The numbers have been absolutely as stellar gets, and we'll run through those. But in terms of the stock price, it's been crazy. It's only up 8% for the year, but this stock went way over $200+ a share, and since that time, it's dropped about 50% roughly to be where it's trading at today, which is around $112. Now, e.l.f., They're the cross sections of quality and price. And e.l.f. does such a phenomenal job of having a very high quality product when it comes to their skincare products and their cosmetics products. And additionally, the price points are very attractive. I mean, you're going to look at the bulk of e.l.f.'s products are priced $5 to $10. So this is a brand that it doesn't matter how much money you have or you don't have, you're going to be able to afford it. You're going to be able to go to your local Target, your local Walmart, buy on Amazon.com, buy directly through e.l.f. And guess what? You're going to be in a situation where you're going to be able to afford that. And that's, pretty phenomenal for this sort of industry to have that be known as quality and known as having low price. Because guess what that gives you? That gives you what is called pricing power. True pricing power. True pricing power is when you have an extremely quality product and you're probably underpricing your product, gives you even more margin opportunity over the coming years, right? Now, e.l.f. has been on a historic run. If we go back to 2019, this company was doing a little over $250 million of revenue. This, on the trailing 12-month basis, they did $1.13 billion of revenue, which is absolutely incredible. This is a historic run. And you look at the growth rates, 9% in 2020, 26% in 2021, 30% in 2022, 79% in 2023, and on a trailing 12-month basis, 27%, a historic run for e.l.f. on a shelf. Now, when it comes to e.l.f., look at the margins. Look where the margins were back here, and look where the margins are today. That's incredible. This company's getting more and more gross margin out of their product because guess what? They have pricing power in the market. So if e.l.f. wants to go up 50 cents, $1 on different products, they can honestly do it. And their consumer base will be fine. They're going to continue to buy that product. If they move up price point 50 cents, $1, it doesn't magically make somebody say, oh, I'm not getting that now. e.l.f. would have to double the price of all their products to make people really say, oh man, e.l.f.'s expensive. And you got to understand, if they even went up, let's say $1 on a product, for their margin profile, it dramatically changes their margin profile. So if they sell something at Target for $3 and Target sells that on the shelf for $5, and then e.l.f. says, we're going from $3 on that item to $4, Target moves that price then to $6 or something around there roughly. The consumer's not going to magically say, oh, it went from 5 to 6, I'm not buying my whatever anymore. No, that's not going to happen. But what that does for e.l.f.'s margin profile is change it immensely. Now, e.l.f. hasn't really even gone after pricing that heavy yet. They could easily do that over this next 5-10 years if they want. They're mainly focused on market share because if you can grab a customer, let's say as a teen in their 20s, they are going to probably stay with you in their 30s, 40s, 50s, and so on and so forth. So e.l.f.'s really been worried about taking market share from all the other massive cosmetics brands that you could see in a Target store or in a Walmart, something like that. Look at this chart here. This shows you shareholder equity here on 1000xstocks.com of e.l.f. over time. That is beautiful. That is what I love to see when it comes to shareholder equity. Now, when it comes to e.l.f., 2-year forward P of 27 on this stock, it's way too low. For a business model as sticky as e.l.f., for a company with as much growth as this company has, for a company that continues to delight to the upside, continues to beat their numbers, this, folks, is what we call too low, way too low. Additionally, next year revenue growth, analysts only have about 14%. I think that's too low as well. I have trouble thinking this company's going to grow anything less than a 20 number. They're expanding internationally right now. The U.S. opportunity is massive. They continue to get more and more shelf space. They continue to sell through at a faster clip than anybody out there. And so when I look at e.l.f., ooh, boy, I think there's too low on multiple fronts. Now, I ran some numbers with the valuation model here on 1000xstocks.com, and here's what I have. Okay, I ran a 22% revenue growth rate on average from 2025 to 2028, which honestly is not crazy at all. I ran net income growth of 32% on the bottom line, which is once again also not crazy in my opinion at all. Net income margins would go to about 13% come 2028, which is not crazy high, especially considering the gross margins on this company are ridiculous and they're likely going to go even higher. Now, as far as P's go, I ran it at about 38 to 48 range, which if you're growing 20% plus top line, 30% plus bottom line, guess what? You can easily command, let's call it a 38 to 48 P ratio range, which puts the stock in 2028 somewhere around 225, 284, 19% compounding annual growth rate on the low end, 26% compounding annual growth rate on the high end. Whew. And keep in mind, e.l.f. has always beaten my projections. So if I'm even running a 22% number there and a 32% number on average here, don't be surprised if they beat that. Don't be surprised at all. So what's buy pricing looking like for this stock? Oh, by the way, I thought it was just worth mentioning before we get to the buy prices. Any and every dip on e.l.f. has been a buy on this company since they went IPO. many years ago. Literally every single time the stock drops big, you buy the stock and you make money. And so this stock's down about 50% roughly from the peak in that 40 to 50% range. And I think this is going to be another one of those situations that people will look back a year from now or a few years from now and be like, oh, that was another big buying opportunity. We should have been buying the stock there, right? So here's my buy prices for e.l.f. on a shelf. Load the boat is under $100. If this stock goes under 100 for any reason, it's a load the boat situation in regards to e.l.f. Buy heavy is under 125. Slow down on buying is kind of that 125 to 155 range. And then stop buying is over 160. I'm at 1,446% in this stock. I think I'll be a lot bigger number in the future, a lot bigger number in regards to this one. Hey, it's Jeremy. I hope you really enjoyed watching that clip here today. What you're looking at in front of you right there, that's 1000xstocks.com. That's my advanced software that I've been working in the background creating for a long time. This software is so much more advanced than what others are presenting out there in the market. And as somebody that's been in the market 15 years, I want to create something that was simple, that had exactly everything I needed to make my judgments on companies, such as forward P ratios, 2-year out forward P ratios, price to sales ratios, forward price to sales ratios. I wanted the ability to be able to compare different companies versus each other. I wanted to be able to compare a Meta versus a Google versus an Apple and be able to see all those different metrics laid out all next to each other. I wanted a service that I could listen to conference calls right through and even be able to toggle and adjust the speed I wanted to listen to those conference calls. I wanted a service that I could search SEC filings right through. I wanted the ability to do that all in one service, and that is exactly what I've created with 1000xstocks.com. If you want to apply for access to this, go to the description area of this video. You can click that link and go ahead and apply for access to this. If you don't want to do that, you can go to 1000xstocks.com. Enjoy. Next one up here, markets could be in for an everything rally. Eric Jackson.
Today joining us now is EMJ Capital founder and president Eric Jackson, someone who I know was happy that the Fed did double, right? The 50 basis point cut. You're in all these sort of high beta tech stocks looking for the Fed cut. So how do you, are you?
And you might say, why is the market not freaking out over bad consumer confidence numbers or the Richmond Fed index, whatever, right? Here's why. Those numbers been trash for the longest time. It's not like that's a new thing. If there was a new development, the market would get freaked out. But when this has been a long game that's been going on, like people aren't going to get freaked out. Like, this is just how it's been, right? This is just how it's been. And the market might view that as it's going to go the other way.
Repositioning? Are you doubling down? What are you doing now?
Yeah, well, Sarah, you're a student of the Fed history, and so the last time that the yield curve was inverted for so long and then finally broke out to the upside the way that we've seen recently in a benign economic environment where rates are cutting down was August of 1982. And when that happened, and there was a stock market rally, which lasted 10 months. NASDAQ went up 107% over those 10 months.
Oh my gosh.
I think we could be in for an everything rally. It's not just small cap tech, although that will participate. It'll be the Mag 7. It'll be other stuff too.
Like Bitcoin, which is going up, gold is going up, commodities are going up. I mean, that speaks to the everything rally. So Tesla, there's a lot of excitement around Tesla lately. Deliveries coming in. Also, we get the robo-taxi day on the 10th. You say it's the biggest AI stock, which is not fully recognized as an AI play. Why?
Yeah, we also got the China news too, and that benefits Tesla as well overnight. It's the full self-driving is obviously what's going to drive the robotaxi event, and full self-driving is all neural nets. It's all AI. They're the leader in the world in terms of miles driven. They have all this information, which is making FSD better and better. So, yeah, I just don't think they have gotten the credit to this point for being an AI play that they will. The rally is going to continue, like we've seen for Tesla since August 5th, at least through the robotaxi event coming up next month. And the other thing is, if you watch the Larry Ellison Oracle Investor Day talk a couple of weeks ago, it's clear that he's still a huge fan of Elon's and of Tesla. And I don't think there's anybody in tech who I respect more in their opinion than Larry's. And Larry, even though he went off the board of Tesla 2 years ago, people forget Part of what happens when he did that, he doesn't have to do any filings. And so he has likely not sold any shares. They're probably worth $9 billion today from the $1 billion that he paid in December 2020.
I don't know how Larry's feeding his family at this point. Does the Elon Musk factor into any of your Tesla analysis? Obviously, polarizing guy. You know, you hear these stories about people say, I can't buy a Tesla anymore because it's Elon Musk. Does that factor in at all? Or is that just sort of media and Twitter hype?
I mean, it factors for good and for bad, Brian. But I think the good is way more than the bad. This is a guy landing rocket ships on, platforms in the middle of the ocean. So I think for Tesla shareholders, the FSD story is an Elon story. So you take the good with the bad, and it's still a great story going forward.
This is a great story. If you haven't been to Easton, Maryland lately, on the Eastern Shore, there's a guy named Paul Prager who's putting all of his money and time into making Easton this destination. My family, that's actually where my ancestors were hanging out in Easton forever ago. But more importantly, he's running a company called TerraWolf, WULF, crypto, Bitcoin, energy, etc. He's built a fortune in energy. What is it about this story and what Paul and his team are doing at TerraWolf that you like so much?
Yeah, there's two smaller cap stories that I just love right now. TerraWolf is one. DeFi Technologies is the other. They're both crypto stories. But TerraWolf, it's an energy story, Brian. I know you're the energy guy at CNBC. And this whole 3 Mile Island constellation news that we got earlier this week shows we just don't have enough energy to power the AI compute needs that are coming up. Now, Core Scientific did a deal earlier this year as a Bitcoin miner with CoreWeave to provide them with basically immediate hookup to the grid. And every other Bitcoin miner has the same kind of story. They are going to do same kinds of deals like Core Scientific did. TerraWolf is smaller than Core Scientific. It's next in line. I like it a lot. The other name I'm a huge fan of, just on a valuation basis, is this smaller company, DeFi Technologies.
Oh man, he's talking about
crypto ETF provider in Europe. They're coming to the U.S. through a partnership with Anthony Pompliano. Trades at 6 times next year's price to earnings versus Robinhood at 32 times, Coinbase at 39 times. That valuation gap's going to shrink.
Okay, so, those are kind of weird stocks to talk about there at the end, but whatever. Markets could be in for an everything rally. So markets could be in for an everything rally. Well, let's think about this for a moment. The market's in an everything rally. I mean, you got tech going up, you have smalls going up, you have mids going up. You really have an everything rally going on. So I wouldn't say it could be in for an everything rally. I mean, just factually, you're getting it all. You're getting it all, man. Like tech's been really good, like the Metas and the Teslas, some of those sorts of stocks for me. Amazon's been good here recently, and then you're getting strength in some of the more exposed to Asia type companies like Estee Lauder and Wynn. Those are rallying. Cake's over 40. I mean, you're kind of getting an everything rally.